Please welcome Vishal Kankani, Principal at Multicoin Capital.
Hi, everyone. I'm Vishal. Today, I'd like to present a thesis, what we call user-generated assets, how they will unlock new business models for internet applications and reorganize the trading flow all over the internet. I started my career in 2009 trading LIBOR futures. One insight that stuck with me from that experience was financial markets are limited by our ability to create assets, not by our willingness to trade them. Blockchains allow anyone to frictionlessly create assets. A user-generated asset is an on-chain asset permissionlessly created by an individual agent, group, or a group. Above, you see a Bitcoin white paper, Filecoin ICO, a decentralized storage protocol from 2017, Bored Apes NFT from 2021 NFT Mania, and Dog We've Had, a popular meme coin from 2024. This evolution of tokens from Bitcoin to meme coins highlights just how effortless launching your own token has become. A decade ago, creating a token meant mastering code and cryptography. Today, launching your own token is just as easy as clicking buttons. You could say half-jokingly that crypto spent a decade and a half just perfecting token launches, and you would not be far off. We believe that the rise of these user-generated assets is an irreversible and an inevitable phenomenon, and it will have profound consequences on the nature of global capital markets in the decades to come. Historically, different types of UGAs have powered different crypto cycles, and in each cycle, we saw a new trading platform emerge as a winner. Mt. Gox led the Bitcoin era of 2013, Binance captured the 2017 altcoins wave, OpenSea dominated NFTs in 2021, and PumpFund became the leading platform of 2024 meme coin mania. In our view, PumpFund went viral because it was the first platform that gave anyone with an internet connection anywhere the ability to instantly launch a token for basically free. That's all good, but why would people launch assets? I believe there are two reasons for that. One is technological and one is social. In the book, Here Comes Everybody, the author Clay Shirky shares an insight that when technology collapses the cost of producing something, the profession associated around it undergoes a maturization. Social media is the perfect analogy. Before social media came, the cost of publishing and distributing news was very high. Only a few publications could afford it. But then, social media came and collapsed the cost of publishing and distributing news and turned everyone with an internet connection into an amateur journalist. Fast forward 2 decades, platforms like X and TikTok have become real challengers to traditional media businesses. A similar shift is happening in global capital markets today. Historically, creating and trading assets has been a costly business intermediated by Wall Street institutions. And guess what? Blockchains collapse the cost of exactly that, creating and trading tokens. On the social side of things, people do not have access to early-stage opportunities like they did 20 to 40 years back. The combined market cap of companies like Apple, Microsoft, Amazon was under $3 billion when they went IPO. And today, we all know the combined market cap of these companies is north of $10 trillion. That's an astounding 3,000x return, plus return, for IPO investors. However, successful technology companies of today stay private for longer, thereby depriving retail upside participation in groundbreaking technology companies of our generation. We are not saying UGAs will replace traditional assets. We are saying UGAs will simply expand the range of things people can and will trade. Here you see a graph. We differentiate these user-generated assets across 2 main axes. One is speculative versus utility. And on the vertical axis, you see short-term relevant assets versus long-term relevant assets. If you focus on I mean, like, if you talk through a few examples, like Bitcoin. Bitcoin was the first UGA created by Satoshi. Over the years, it transitioned from a speculative coin to a potential long-term store of value today. Online communities can launch these assets. Like, if their mission resonates with the wider world, these UGAs can become more long-lasting and more utility-driven. Constitution DAO from the previous cycle is a great example. In November 2021, a group of internet strangers organized to bid on a rare private copy of the US Constitution that was coming up for auction. In just about a week, they raised 47 million US dollars on crypto rails in exchange of a token that would have governed how the Constitution copy would be used if they won. They ultimately finished second, but it did demonstrate how quickly online communities can form, fund, and act at scale. Let's talk about another hypothetical example that's more utility-driven and less speculative. A company like Nike could hypothetically launch a series of prediction markets trying to estimate the future popularity of athletes. And that could then tell them how to actually allocate their marketing dollars. And obviously, in the last extreme end, we get stuff like meme coins that are rooted in viral cultural moments. The main point we want to drive home with this slide is that all meme coins are UGAs. But to believe that all UGAs will also be meme coins in the long run is probably misplaced. There is something truly valuable crypto can help unlock by financializing internet's attention. Let's shift the focus to the trading of these UGAs. In traditional financial markets, people find trades in all sorts of places: X, Reddit, investor newsletters, Bloomberg, etc. But they have to log into their brokerage or exchange accounts to actually execute on these trades. This separation of discovery and execution is not ideal for trading UGAs for a couple of reasons. Firstly, discovering UGAs in real time is important. Many UGAs, if not all, are ephemeral, and on-chain liquidity formation is insanely fast, given the global and 24/7, 365 nature of blockchains. Secondly, no brokerage or exchange can keep up with the rate at which UGAs are exploding. In this chart, you see the total number of tokens launched on blockchains have gone from a few thousand to hundreds of millions just in a few years. To put that number in context, Robinhood offers less than 12,000 total assets on its platform for its users. There is no way a brokerage like Robinhood can just list all these assets in real time. And even if a brokerage integrates with the DeFi exchange on the back end, the discovery will still be broken. Thus, for a seamless UGA trading experience, we believe that discovery and execution should be bundled and available 24/7, 365. Traditional brokerages and exchanges, as I said, are simply not built for that. But there is good news. All the crypto innovation of the past decade has finally enabled a smooth on-chain trading experience. We call that internet capital markets, and I'm sure you have heard of that before. In his 2022 Multicoin Summit talk, Kyle pointed a very simple but powerful observation. Today, if you go on any internet website or application, you can give them money, they'll happily take it. But if you were to receive money back from them, it's a very long and long process. But on crypto rails, any company can not only take money from you, but also can give you money in real time. Now, why is this important? This is important because using crypto rails, any internet application can embed trading inside it natively. And from first principles, then it makes sense for anybody to trade assets wherever they consume information. Hence, using internet capital markets, we can now bundle the previously separated discovery and execution process. Let's discuss an example of such bundling. We have traditional market structure on the left side here. Now think back to the 2021 GameStop frenzy. Reddit was buzzing. Thousands of traders were passionately debating GameStop stock on Wall Street bets. But to actually trade the stock, users had to leave Reddit, open their brokerage app, which is a second application, move money from their bank, which is a third application, and wait for hours or even days for funds to clear. Meanwhile, the stock was swinging wildly, and even a few hours delay could have meant a difference between a good trade and a bad trade, and in some cases, avoiding margin calls and liquidations. And just when things became really volatile, Robinhood restricted trading. Now contrast that with the internet capital's market structure on the right side. In that example, but in an on-chain world, a trader could have discovered, debated, and traded assets right from Reddit or YouTube, wherever they consume information, instantly and 24/7. Hence, as billions of UGAs come online, internet capital markets, we believe, is the right foundation for trading them. Now, when every application can embed trading inside it, we will unlock new ways of trading. Traders can trade directly from within group chats, from their social media feed, from live streams, and many more ways. Let's discuss an example of something like this. On the right side, you see a user, Max, discovers a post from Tesla requiring shareholders to vote in support of Elon Musk's pay package. Max believes this is a no-brainer and the vote will pass and would like to monetize his view. Max instantly creates a prediction market in reply to the original post. Will shareholders approve Elon Musk's pay at the 2025 annual meeting? And he puts in $100 and makes the market odds 60-40 to whoever wants to take the other side. Another user, John, finds this market in his feed. John believes that the vote is not that straightforward and actually might fail, and he would also like to monetize his view. He puts in $50 and takes the other side of Max. Other users similarly can either go against Max or join Max in the market. The main point is not this market. The point is, what this shows is that people can now read news, create markets, and trade them, all without ever leaving the X feed or whatever platform they are on. This level of frictionless in-context trading simply has not existed before. All right, so what does this mean? What this implies is that we are in a unique moment in time for entrepreneurs to reimagine the trading experience from first principles. We do expect to see a proliferation of trading applications all over the internet. In social media, the atomic unit was content. What that means is that everything you do on social media, like, share, post, it all is attached to a content. A content could be of different types: text, image, video. And you have seen winners along those categories like X, Instagram, YouTube, TikTok, etc. But in crypto, it's a little complicated. The atomic unit is the token. Everything you do on blockchains revolves around tokens. On the surface, it looks like all tokens are the same because price is the only attribute that matters. But in the next couple of slides, we share a few specific design choices entrepreneurs can make to deliver different trading experience for different UGAs. On this graph, you see two axes. On the x-axis, it's a single player versus multiplayer. Multiplayer is more social. Y-axis is assets that are relevant in the short term versus long term. Just to quickly talk about a few applications here. If you focus on multiplayer features focused on short-term assets, you get applications that are more focused on prediction markets, meme coins, stuff like Calci and Pump Fun. But if you focus on the extreme opposite end, like a solo trading experience on long-term assets like Bitcoin, DeFi protocols, stocks, you get applications like Coinbase and Robinhood. And there are the other two quadrants where we can focus on multiplayer features with long-term assets. You can get stuff like eToro. And lastly, on the second quadrant on the top left, you see something like Ixiom, which is a solo trading experience for ephemeral assets like UGAs, or a big fraction of UGAs. Ixiom is a trading terminal for power traders. They made 9 figures just in their first year of operations. There's another axis to differentiate UGA trading applications, and that is what is the primary job to be done of the application? Is it an entertainment-seeking application, or is it a profit-seeking application? Now, the intersection of entertainment and finance is a novel category, and we can talk about a couple of examples. There is a startup. It plans to do live stream trading competitions with features such as copy trade, counter trade, leaderboard, etc. They're turning trading itself into a spectator sport and entertainment content. Here, you see another startup called Euphoria, which makes use of embedded trading and a tap-to-trade phenomenon. What you see are yellow squares. Users are tapping on the screen. And they are saying that at a given time, the price would fall within that bucket. These are crazy instruments. Like, I used to sell them at Deutsche Bank. Like, these are barrier options. And users are now trading barrier options without knowing that they are trading barrier options with a few seconds to minutes to expiry. You can say bye-bye to zero-day trading options. Now, what will happen to global financial markets with these things is they will undergo financialization. Global financial markets have already been financializing since 1980s. Blockchains will only supercharge that process because they collapse the cost of creating and trading markets. In the coming years, we will see the number of people launching UGAs go exponential, and the number of people trading UGAs go exponential. Everyone will become a trader of something, and every app will become a trading app. This sounds scary, I know, but I think in the long arc of time, we will create financial products that are actually useful for the economy to transfer risk across different players. Social media amateurized journalism and created challenges to traditional media businesses. We believe UGAs and internet capital markets will amateurize Wall Street and potentially create challenges to traditional financial institutions. Several crypto apps are already making 9 figures in revenue in their first year of operations. It's a seismic shift, and we are barely scratching the surface. What does this mean in conclusion? In this last slide, I would like to say, when every app becomes a trading app, every app becomes an order flow engine. These apps can monetize their users' attention using the well-understood business models of exchanges like trading fees, payment for order flow for brokerages, and subscriptions. Consequently, such applications will rely less on advertising and thereby improving the user experience dramatically. And finally, brokerages and exchanges control almost 100% of the retail order flow today, primarily composed of traditional assets. But as UGAs proliferate and trading gets embedded into every internet application, the retail order flow will fragment, and in the process, will likely get reorganized all over the internet. We at Multicoin are excited about what this intersection of user-generated assets and internet capital markets will unlock for global capital markets, and are actively tracking this sector. Thank you.